I mean, this was pretty surprising, the fact that they've had to delay it for a couple of days. Does it really go to, just show that there's so much political uneasiness about some of the allies, or is it just a strategic, longer-term question that they're trying to answer?
Yeah, our reading of the situation is that there is indeed a truly sort of strategic, long-term underlying sort of consideration here. OPEC faces an increasingly difficult dilemma. The question that has come up in the March meeting, it's coming up now, it will come up many, many times in future years, is this: do we cut production now, which has obvious short-term benefits in terms of defending the price, or do we start defending our market share for the long run? And this is an increasingly pertinent choice. In the past, OPEC always set its oil policy against the backdrop of rising oil demand. Oil demand has grown 1.2, 1.3 million barrels a day year over year for decades. If that is the case, then ultimately there is room for everybody in the oil market if demand steadily grows. But I think even the staunchest oil optimist will have to recognize that there is at least some probability that oil demand will peak sometime in the 2030s and will then start to decline. And when peak oil demand appears on the horizon, immediately you're competing for a pool of remaining oil demand that is a finite number. Might still be a very large number, but it's a finite number. And then market share becomes very important. So the question in terms of OPEC oil policy is, do we run it for the short run or do we run it for the long run? And different countries have different trade-offs in terms of how much short-term pain they can withstand for the longer-term benefits. That's not the same for every country. And that is ultimately, in my reading, where a lot of this tension is coming from. If you give up too much market share for too long, ultimately you're going to be the one leaving oil in the ground, and that is not a favorable outcome for OPEC either, of course.
Martjin, are we going to see countries leave OPEC? And if it does, is that it for the cartel?
Well, look, to say that this is the billion-dollar question would be slightly understating it. I would not expect that soon, as in this story or this expectation about oil demand peaking is on the horizon, but it's still quite far out. Just being practical about it, I would suspect that the cohesion that has been built up over the last few years will last a little bit longer. But as time goes by, and this issue of oil demand peaking becomes more and more pertinent, then the competition for market share, either OPEC versus non-OPEC or within OPEC itself, becomes ever more intense. And under those circumstances, there are only two options that are in the end then stable. It's either more countries joining OPEC, so that the entire oil industry becomes coordinated, but that seems very unlikely, or ultimately countries leaving OPEC and competing for market share in their own right. Still quite a few years off, I would imagine, but ultimately that is part of the range of possible outcomes.
Martin, U.S. shale production used to be some sort of pressure to OPEC Plus. Has that not disappeared, but diminished greatly as a result of the decline in production this year?
Yeah, I would take a slightly more cautious view on that. I know that there's a widespread expectation that this is indeed so, that U.S. shale production will decline in the first half of next year, and it will almost inevitably do that because the rig count at some point fell to such a low level that the declines are very likely in the first half of last year. But this I find very interesting. 12-month forward WTI reached $43, $44 a barrel at the start of August. And I'm mentioning 12-month forward WTI because that is not a price that anybody needs to speculate about, right? 12-month forward WTI of an E&P company, you can lock that in. It reached that level, $43, $40 at the start of August. From the middle of August until last week, we've added 75 horizontal rigs in the United States. We've been adding 5 rigs a week since WTI, 12-month forward WTI, got into that low 40s level, which clearly signals that low 40s passes through a number of very important break-even levels for U.S. shale, even today. Now, look, the rig count came from exceptionally low levels, so this decline in the first half is arguably baked in. But oil at this level, or lo and behold, it rises another $5, the rig count will continue to grow. because you're looking at spreads between break-evens and hedgeable oil prices that are simply very attractive. If we add another 75 rigs, say over the next 15 weeks, right, the same as what we've done over the last 15 weeks, then we are ending up with 360, 370 horizontal rigs in the United States. Then we're growing production in the second half of next year and arguably growing again then in early 2022. When that comes on the horizon, I think it will start to inform OPEC policy. It's more, you have to look slightly longer into the future than just focusing on the first half of next year.